Business Unusual, separating economic facts from fiction.
Good evening, I'm Andy Hodges. Welcome to ZFM Stereo's premier business show, Business Unusual, a show where we discuss everything to do with business, finance and economics. Tonight we're discussing the state of the country's insurance sector. In this studio I'm joined by two very good guests, gentlemen from the Insurance and Pensions Commission of Zimbabwe, Nao Chivangira, who is IPEC's Manager of Pensions, and Lloyd Gumbo, the IPEC spokesman. Gentlemen, welcome to Business Unusual.
Thank you, Andy.
Now, you may wonder, listeners, why we are talking about pensions, and insurance industries. Well, think about it this way. You're going away this Easter, you worry about your house, you worry about theft on your house, you worry about fire damage to your house. What about your car? What about your pension? When you retire, don't you not want a proper pension so you can live your life the way you'd like to? Well, that's what we're going to talk about tonight. So I'm sure, listeners, you have lots of questions to ask the two gentlemen here because, hey, if you can't ask them, who else can you ask? So please, feel free to get in touch on telephone number 0772 168 045, WhatsApp 0733 168 045, or of course our various social media platforms, Facebook and Twitter. Now, gentlemen, the Insurance and Pensions Commission is a statutory body that was created through an Act of Parliament, the Insurance and Pensions Commission Act, to regulate the insurance and pensions industry in Zimbabwe. The Commission's principal function is to protect the interests, rights and benefits of insurance and pensions consumers, that's policyholders and fund managers, and to ensure the general stability of the insurance and pensions industry. So, Lloyd, my first question is, do you actually think that you fulfilled that mandate? Have you looked after us, the policyholders?
Thank you, Andy. Yes, indeed, we are looking after the interests of policyholders and pension fund members. We are there to listen to their concerns. If they have any complaint, they lodge it with the Insurance and Pensions Commission. Then we take it up with the respective regulated entity to make sure that they treat all their customers fairly. So if you're a policyholder or a pension fund member, we expect you to be treated fairly by your insurance company or your pension fund. So if they fail in that regard, as the regulator, we are there to make sure that they treat you fairly in terms of what they promised you, in terms of your expectations. Are they in relation to what they promised you? So indeed, we are there to protect those interests, and we are doing it.
Okay, I mean, look, through our research, we've seen that, 2015, you came into being, if I'm not mistaken. And obviously, since then, you have done lots of things and talked about lots of things. But prior to that, I think pensioners particularly feel a little bit let down by the industry. And I think that's a true comment. What would you say to that?
In fact, we came into being in 2006. Yes.
Oh, that makes it even worse.
From the Ministry of Finance.
All right.
So in 2015, I'm sure you're referring to the Commission of Inquiry that was then set up by the President to look into the loss of value from the Zimbabwean dollar to the multi-currency regime. But in terms of the issue that you are raising about the pensioners, the major issue that's coming up is the loss of values after the country dollarized. You will be aware that we went through an economic hyperinflationary period where a lot of things in terms of the economy was not performing. So the insurance and pensions industry does not operate in isolation. It also operates in that broad economic environment. So some of the problems that then emanated in the insurance and pensions industry were because of the broad economic environment that we're operating in. But beyond that, you will look at the Commission of Inquiry that was then set up by the President in 2015. It was appointed to look into the issues to do with the loss of values, to say someone had a policy for 20 years. The hyperinflationary period started maybe around 2006, from 2004, 2005 to 2008. So can we say someone who had been contributing for 20 years is also affected by those 4 or 5 years of the hyperinflationary era?
Right.
So that Commission of Inquiry is what it looked at. It came up with recommendations, which broadly speaking is they recommended that there has to be compensation of some sort. So now we await guidance from government in terms of the compensations that are going to be given to those policyholders and fund members.
Okay, well, I mean, let me put it this way. I mean, Mr. Itai Chirume, who is one of the commissioners of inquiry, he said, when we dollarized, companies did not recalculate the contributions of pensioners, therefore the need to do an investigation. I mean, maybe I'm just a simple chap, but here I am. I've been investing in my pension for 20 years. Maybe now you can answer this. 20 years I've been contributing. And then, as you said, over 4 or 5 years, there is this inflationary environment and so forth, negative economic environment. But hang on, did not the pension funds take that money and invest it in buildings and assets and so forth? So that come dollarization, surely those assets still maintain their value. So therefore, why am I as a policy holder being prejudiced by this? Surely I should have some value rather than being told, oh, by the way, your pensions or your insurance is worth nothing.
Thank you very much, Andy. I think the challenge that took place in pension funds was that you have got different generations within one pension fund. For example, you'll be having a member who joined in 1990, and the dollar that was being contributed in 1990 was worth more than a dollar that was contributed in 2008. Then you had a situation where some members joined the fund, say in 2004 or in 2006 or even in 2008. But if you look at the nominal value of the dollar in 2008 and the dollar in 1990, those two are different. But you had situations in pension funds where some pension funds were treating a dollar contributed in 2008 as being equal to a dollar contributed in 1990. And that's where the problem is. Because if you then treat those two people or those two contributions similarly, you end up having a situation where you are transferring value from a person who contributed in 1990 to a generation that joined in 2008, and it's one of those issues that was being looked at by the Commission.
Yeah, but you say that, but when it came to dollarization, even those from 1998 and those from 2000 and whatever, 2000, they still got nothing from their pension. I mean, the point is this: surely, even if it was $1 in 1999 was more and it was less in 2000, surely they used that money to buy assets, which when dollarization came, became dollarized assets. So you had buildings, you had assets that the insurance companies had. And in fact, if I'm not mistaken, I mean, there's a quote here. It says that when contributions from pensions and insurance premiums are made monthly, pension insurance companies invest the money in property, stock markets, money markets, and other investments. Pensioners and policyholders became part owners to those investments, together with shareholders, and this should be reflected on the balance sheet of these companies. But it appears that, honestly, I maybe, as I said, I'm not an insurance guy like you are, but I feel that pensioners and insurance people were a bit shortchanged by this. In other words, the insurance companies kept their assets on their books in US dollar value, but basically wrote off the policyholders' premium policies. Is that a correct statement?
Yeah, that's a correct statement. What basically happened is you have got a situation where someone contributed maybe $100 for argument's sake in 1995. Then we come to 2006, you slash 3 zeros in the $100. So what that basically means is that you are left with 0.01 being the contribution that was made by that person. So if the pension fund doesn't look at the real value of those contributions, right, there's a risk that the people who contributed in the 80s, in the 90s, their values or their accumulated credit, if it's not done properly, once you debase 3 zeros in 2006, in 2008, I think it was 10 or so zeros.
Right.
Then what that means is the person who had $100 from 1990 will be having 0.000 and that will be written off.
Yeah, but isn't the point that when they put in that $1 in 1990, the insurance company invested it at that point? They didn't wait until it was 0.001. Therefore, they had assets which had value. So why then do pensioners get nothing when it's dollarized? I'm sorry, maybe I'm missing the point here.
Yeah, I've explained what happened, but I'm not justifying it.
Okay,
I'm not saying,
of course not.
I'm not saying that is the right way to do it.
No.
But that is what was happening. And that is why we ended up having a commission of inquiry. And that commission of inquiry said, hold on, $1 contributed in 1990 is different from $1 contributed in 2008. The commission of inquiry said $1 contributed in 1990 bought 1, 2, 3, 4 assets, but $1 contributed in 2008 didn't buy anything.
Right.
So let's review the situation and say, what you contributed didn't buy much.
Because
so your value in the fund then will have to go down.
Because from what we're seeing, they're talking about $1.6 billion. Oh, I think that the number may be the commissioner. I know maybe you can't comment on the report that I think is before cabinet, but I'm sure you have an idea of what's happening. But I mean, they say that 1.6 billion should be paid back to policy holders. Is that a true figure? Is that correct situation? Lloyd?
We wouldn't want to get into the figures, but what we are aware of is that they have recommended compensation. And in terms of the money that people are supposed to be compensated, the Commission of Inquiry did not specify how much exactly a policyholder or a fund member was supposed to be compensated. They requested that maybe a calculation of some sort is introduced so that we know if someone had so many, or maybe he had so much in 2000 before dollarization in the Zim dollar era, they should be getting how much. So that we still await government guidance in that regard. But the fact of the matter is that the Commission of Inquiry recommended compensation.
Well, I think what's great about this, though, is that, even though this happened in 2009, you guys, IPEC and the government have actually done something about it. You haven't left us all, because imagine the hardships of someone who's saved up all their lives for their pension, and suddenly come 2009 it's worth nothing. Now they have to get to 65, they've got to work. Listeners, I think you're starting to see the point here of this conversation, and IPEC here. Please, there's lots of questions. Those of you who have problems with your pensions, those of you with your insurance, we have the gentleman right here to answer your questions. So please feel free to get in touch on our phone number 0772 168 045 or WhatsApp 0773 168 045, or our various social media platforms, Facebook and Twitter. In fact, let's take a question here. The issue of fine print is quite a headache, as the insurance agents usually understand the facts, and sometimes it's not even on the application form. What can I do in such circumstances when my claim is then declined? That's from Jakilo.
Thank you, Andy. Fine print.
The fine print.
Yes.
It happens in every contract, doesn't it?
Yes, and we get so many complaints from policyholders saying, I didn't see this. But what we urge our stakeholders or the policyholders is that they should always read the rules and the terms and conditions of each policy that they are buying. Sometimes because the papers are quite a lot, so, and you are not really interested in reading. What you are interested in is just buying the policy. But it's necessary that when you are buying a policy, you have to read the terms and conditions so that you know what you are covered against. Because the risk that's there is, if you don't read the policy, it may have exclusions of the things that you think are being covered by that policy.
Right.
So it's necessary for policyholders to read that policy before they come to claim. So as soon as you are buying that as soon as you buy the policy, or even before you pay your first premium, read the terms and conditions and see if you are agreeable to those terms and conditions. If they don't meet your expectations, then you may as well say, okay, I'm not buying the policy because it doesn't meet my expectations as a policyholder. But if they do meet your expectations,
right,
then you're looking at a situation where when you claim, you have your policy documents with specific cover that you have been promised.
Yeah, but I mean, that assumes that everybody can read legal documents and understands them. I mean, we're talking here about trying to expand the insurance industry to get people in it. So therefore, reading fine print is not something that, a lot of people do. So how do you make sure that those policies that are given, even including those fine print, are fair and relevant to the policyholders, rather than just fly-by-night people selling you insurance policies that you send money? Now, please.
Yeah, probably before we talk about how the policyholders can safeguard against such situations, before any insurance product is launched into the market, it has to be approved by IPEC. So at product approval, we look at the sample weighting, we look at the pricing, we look at the assumptions, the actuarial valuation reports and so forth, to see if the policy will give value to policyholders. But over and above that, if a policyholder is approaching, or if a policyholder, prospective policyholder wants to buy an insurance policy, we always encourage that you go via an insurance broker. An insurance broker the role of the insurance broker usually is to provide advice to policyholders. You go to them and tell them that this is my need. They can go around the market, then they look for specific cover that
meets your requirements.
Your requirements.
Okay.
They will look at the insurance company that will meet the specific requirement. And
Right.
they will be representing your interest. They will be able to negotiate with the insurance company on your behalf so that you don't get yourself into something that you are not
You
expecting.
get the policy that you expect and you want.
Yes.
Sorry, Lloyd.
Maybe what I can add is if they don't understand the terms and conditions as presented on the policy documents, they can ask whether it's an insurance agent to explain to them what the policy is all about. They are allowed to ask.
Right. I think that's critical, Lloyd. I mean, the point here is this, is that listeners, don't just sign something. Ask for what you want, try and get the coverage that you want, yeah? And then ask for advice. And I'm sure IPEC is also there to help them if they need it. And then you sign the right policies. Otherwise, you sign a policy and, 5-10 years from now, you suddenly don't get what you expect that you've been paying money for every month. That's correct.
In fact, we say if you are buying a policy, don't sign a blank document. Only sign for something that you have written. Don't say I will sign so that the insurance agent will fill in the other details for me.
Right. That's a
only
recipe
sign-
for disaster.
Yes, you only sign for something that you have written.
Right.
Remember, what you say in the policy document is strengthened by your signature. So if you just put your signature there and ask someone to do it for you, they may put the things that you didn't expect.
Got you. Listen, you can see how we get. Let me try and put it into perspective for you. This is your money, by the way, your pension and insurance policies. The bulk of property investments on the Zimbabwe Stock Exchange are made by pension and insurance funds. 66% of institutional investors in the Zimbabwe Stock Exchange were insurance companies and pension funds. 80% of all property investments were done by insurance companies and pension funds. And 40% of all bank deposits were coming from insurance companies. This is from your Commissioner of Insurance Pensions Provident Fund, Tendai Karonga. This is quoted from him. I mean, listeners, you have to understand how much pensions and insurance is so important to you. I think it's critical, and I'm going to keep on driving that, because what are you going to do? You're going away this Easter. You're driving hopefully to your Kumusha and going to see your family. And what happens? Your house burns down. You want fire insurance policy. Or, God forbid, something happens to you, you at least want a death policy, right? Death benefits. You want all sorts of, wow, the insurance policies are there. So you have questions, please feel free to get in touch on phone number 07721 68045, WhatsApp 07331 68045, or our various social media platforms, Facebook and Twitter. Gentlemen, I have a question from one of our listeners. I work at a certain insurance company as an agent. We sell motor insurance, etc. They collect thousands, yet they pay us peanuts. You don't even have contracts. So this is now not just about the policy holders. This is now the people that work in the industry. Do you have a comment for that? Oh, now, yes.
Thank you for that question. The issue to do with commissions for brokers and agents is actually regulated. We have issued a circular that stipulates various commissions that can be paid to agents and insurance brokers for different classes of business. Mm-hmm. So if they've got any issue, they can approach us with their specific complaint so that we can deal with it in terms of the guidelines that we have issued to the market.
In fact, you've made a good point, because I know that you've put in place some form of complaint system internally in your organization. And that doesn't just apply to policy holders. It also applies to people who work in the industry, correct? Maybe you could talk me through this complaint process. I mean, how does it actually work? How do they know they're going to get some feedback from IPEC?
All right, what happens is if you have a complaint, whether you're, let's say as a pedestrian, you are walking by, someone hits you with their car, you get injured, you are a third party, you have a right to claim compensation. So if you are not getting any positive feedback from the respective insurance company, you can come to the Insurance and Pensions Commission. But we are there to take complaints from members of the public, policyholders, pension fund members, if they feel that they are not being fairly treated by their insurance company, or they are not, the insurance company is not meeting their expectations. We have platforms that people can get in touch with. They can get in touch with us on, that's WhatsApp, 0772 154 281. 0772-154-281. We are also on Facebook. We are on Twitter. On Facebook, it's Insurance and Pensions Commission. On Twitter, it's at IPEC ZW. So if you have any specific complaint that you want to lodge with the Commission, you can raise us on those platforms. Or better still, you can even visit us at 160 Roseville Avenue. For all the policyholders or anyone who comes to us to complain, we don't charge them anything. The service that we offer them is for free.
Okay.
Yes, we don't charge them anything. The
All right.
service is for free. So in that regard, we actually urge policyholders or fund members who may feel maybe the insurance company or the pension fund has not treated them fairly, before they go to lawyers where they are charged, they can come to the Insurance and Pensions Commission. Sometimes we can be able to resolve the problem without the need to engage lawyers.
Which, of course, is the best way.
Yes.
Yeah. You know, I think that's great. Listeners, I mean, I think you can hear that. IPEC is saying, look, you know, if you have a problem, you have issues that you have with any type of policy. Remember, we're not just talking pensions, we're talking life, we're talking death benefits, etc. You know, please feel free to contact them. I'm sure that Lloyd will give us the WhatsApp numbers, because this is critical. I you know, when I looked at some of the numbers, you know, I was quite taken aback. You know, insurance penetration has been on decline to 1.5% in 2015 from a high of 6% in 2004. I understand that 70% of Zimbabweans have no insurance whatsoever. Is that a true statement? No?
According to the Finscope survey, 70% of Zimbabweans don't have access to insurance. But since that survey was conducted sometime in 2014, 2015, we have managed to score a lot of progress in terms of having a number of people covered. We have launched what we call microinsurance.
Oh yes, this I really want to know about. This sounds exciting.
This is insurance that is meant for those who were previously financially excluded.
Okay.
And I can tell you that right now we are sitting on in excess of 2 million policyholders who have signed up for microinsurance.
Okay. First of all, I think let's step back a bit. What is microinsurance? How about that for a question?
Microinsurance is that insurance which is low cost, simple, and it's meant for those who are financially excluded.
But what does it cover? Like if you say microinsurance, does it cover all the normal things like death and pensions?
It covers everything. It could be funeral, it could be death, it could be protection of your goat in the rural area, or your cow, or whatever.
Okay. No, I mean, the things that are necessary.
Yeah.
Because I know that one of the things that you did, I mean, you're conducting primary research in different geographic regions of the country, to ascertain client-specific needs with respect to microinsurance products in order to inform regulatory interventions. I mean, it's important because obviously different regions of our country require different types of insurance. And so I suppose the microfinance is that gap between the large insurance companies that make, I saw today one made 300 million, pretty close, profits, which is not bad, I must say, and those people who are previously uninsurable, or if I can say they didn't have access to insurance. Okay, well that's perfect, thank you very much. Now, there is another thing which I found quite interesting. You're discussing with government, or government is discussing putting in place an insurance policy protection fund. Is that correct? Maybe you could explain what that is and how is that supposed to work?
If you look, I would liken it to the situation that we have for banks. In banks, if a bank goes under, we have got the Deposit Protection Corporation, where it's sort of insurance against bank failure. Some depositors will go there and manage to salvage something. So we want to set up a similar structure in the insurance industry, where if an insurance company goes under, policyholders can access part of their benefits or of their benefits from the Policyholder Protection Fund.
Okay, all right, I'm with you. So, all right, therefore you allow them to get like the deposit protection scheme in banks, I suppose you're talking about, whereby a certain percentage of their money, they won't lose it. But surely your regulatory role is to make sure that that doesn't happen. Is that not correct? That they don't fail. Maybe I'm missing something here, but isn't that true?
That's very true, Andy. We have a number of mechanisms in place to make sure that the insurance companies remain operational and viable, safe and sound. We have what we call off-site surveillance. We also do on-site inspections. We look at all the insurance companies, the pension funds, to say how safe and sound are they. If we are to get claims from your policyholders, will you still be able to stand strong? Will you be able to remain viable? So the moment we realize that there are red flags, we immediately put intervention measures to make sure we protect the policyholders.
This is proactive rather than after the fact.
Yes, because we realized that if we don't carry out those off-site surveillance and on-site inspections, some insurance companies may be struggling and they continue to write business, and when policyholders then claim, they don't get the compensation that they expected. So these inspections and surveillance system that we have put in place, they help us avoid such issues. These are safeguards measures to make sure that policyholders' interests are protected.
All right. Okay. I think we'll take a break now, but I think this is important. We're going to continue this discussion. Listeners, please feel free to contact us about this. This is a very important subject for you. Join me with now Chivangiwa. He's the pensions commissioner. He's the IPEC manager of pensions, and Lloyd Gumbo, the IPEC spokesman. We'll be back after the break.
It's ZFM Stereo Talk.
Then there's no point of us having elections in Zimbabwe. We're a critical electoral bloc, and I think in terms of demography, young women between the ages of 18 and 35 as a group are the largest compared to other age groups put separately.
The talk that gets you talking. Mondays to Thursdays between 6 p.m. and 9 p.m.
1, 2, 3, let's go! Let's go. We're One Direction. Hello, this is Maroon 5.
Hey, it's Katy Perry. This is your girl Rihanna.
Hey, we're Imagine Dragons.
Let's go!
Hey, I'm Taylor Swift.
Hey, this is Ed Sheeran. I'm Calvin Hodges. All the hits. Come on, we gon' make you feel good.
So good, so good. Music that makes you feel good. All day, every day.
Z.
It's ZFM Stereo Talk.
But we as analysts, we have a tendency that when we are discussing about the ZIFA issues, we have a tendency of viewing ZIFA as if it operates from the moon. And outside the Zimbabwean economy, we are aware of how our economy is operating. These demands were just unrealistic.
The talk that gets you talking. Mondays to Thursdays between 6 p.m. and 9 p.m.
Business Unusual, separating economic facts from fiction.
Well, pity listeners, you weren't here during the break because we started having actually a more interesting conversation. One of the issues that I was asking my guests about was mobile insurance or insurance products that have been sold via mobile or via buying airtime and you get something. And I understand that certain companies had products and then the product either died away or shifted to something else. You know, what would you say to those people that I suppose in a way, I mean, we've had comments here that feel shortchanged and that they had put money or something into this product. It suddenly vanished into something else. Maybe you could explain it simply so people understand that maybe they didn't lose their money, or did they lose their money?
There was a product which was offered by one of our insurance companies, and they were riding on the database for one of the mobile network operators. So this was a product where if you die, you get a certain benefit. So the challenge that happened is that there was a technical partner which was based in Namibia. So the technical partner was providing the platform for transacting on these life policies. So at one point, the technical partner pulled off the platform wherein the policyholders were supposed to be using to contribute their premiums to the insurance companies. So that meant that there was no means for the policyholders to transact the life policies. And because of that, the product was discontinued.
Okay, so what happened to the money that people paid into that product?
What the insurers did is we intervened.
Oh, IPEC intervened.
Yes.
Oh, excellent.
To make sure that the policyholders are protected. And because of our intervention, they set aside a fund. Remember, when we are talking of life insurance, you are paid. These were life policies wherein one is only eligible to claim if they die.
Ah, okay.
So there was a fund which was set up to say if there is anyone who died when these policies were still valid, they can come and make a claim.
Okay, what about those who didn't die? Which, of course, I hope is most of us.
Yeah, when you talk of life insurance, you can only get a benefit if a certain insured event happens.
Okay.
If it doesn't happen, then tough luck.
Okay, but hang on. But let's say that I then do die. I mean, God forbid, but let's say I then do die. Am I covered?
Normally, when insurance comes and sells you an insurance policy, it's valid for a certain period.
Okay.
So I could sell you a policy which is saying if you die within the next 10 years, I will pay your beloved family this much. So if you don't die within those 10 years and you die in the 12th year, what that basically means is that you are not covered.
Okay.
You were only covered for a specific period.
Right. So can I say then that those policy holders, or if I can call that, who bought a product via their mobile app, they can seek guidance or advice from IPEC, or where would they go to find out exactly what's happening, or where is their policy? Because remember, when you do it on a mobile app, you don't get a form or any small print, do you, to sign? It's just something that they deduct off you. So you actually have got no physical proof you did something. So what is IPEC doing about that? I mean, what happens to those guys who are still alive but have paid money towards this policy?
Yeah, like I said, if the people are still alive, the insured event was dead. So if you didn't die, so you are not eligible to claim.
Okay, but you did pay, right?
Yes.
Okay.
Insurance, the simple principle in insurance is that the fortunate will finance the less fortunate.
Okay.
It's a game of numbers. Wherein I will give you an example. If you insure your car, third-party insurance, for example, you pay $35. But you are involved in you hit someone's car and the damage is worth $2,000.
Right.
You paid $35, but the insurance company will pay $2,000 for you.
Okay.
Look at the difference, $2,000 versus $35. Where do you think the difference is coming from? There are those other policyholders who were not involved in an accident. So their premiums are going to help you. They are the fortunate ones who are going to help you because they are the less fortunate.
Yeah,
so similarly, when you're talking of life insurance, if you have got life insurance cover for a certain period, for example, if I insure 10,000 people for the next 5 years, I know that within the next 5 years, not everyone is going to die. So I can do my actuarial calculations and whatever and say out of these 10,000, maybe 3,000 will die. And I do my estimations and I price knowing that only 3,000 will die.
Nice. No, I mean, I think I understand you, but I think honestly, people that buy these things expect something back from these policies, you know, and I'm sure I understand actuarial. Maybe they even took that money and invested in assets. The fact is that if I paid something, it vanishes and I don't know where my money went. I've got no policy. Where do I go to find out? I think this is the bottom line. I like you. Okay. Do I come to IPEC? Because I can't go to the person where the policy is no longer there, correct? So where do I go?
Well, maybe your question is in two parts.
Right.
Do you talk of the policies in the physical policy document? Because when you are signing up on mobile, you don't get anything.
You don't get anything, correct? Okay. But they deduct, correct?
Yes, but to address that issue, whenever remember I talked about the product approval that is done by IPEC.
Right.
Whenever there's a new product that is being launched by an insurance company, but it's going to be via a mobile network platform, what we do is that insurance company lodges what we call a master policy copy with the regulator, so that whenever we receive a complaint, we know the terms and conditions of that policy.
Oh, hang on.
And apart from that, the insurance company should also give you a copy if you require a copy. they can give you.
Okay, all right. You can see that this is a very interesting topic, and yes, what I don't want listeners to think is insurance and pensions are complicated. They're not. I think it's about what you want, what policies that you're looking for, and how do you get them. So please feel free to join in the conversation. Get in touch on our phone number 0772-168-045, on WhatsApp 0733-168-045, and of course our various social media platforms, Facebook and Twitter. I have a question from Zachariah. I got my pension from the government in 2007, but before I used it, the money was worth nothing. Is this my fault? Secondly, doesn't this need to be compensated by the government? Thank you, Zachariah. Thank you for that, Zachariah. I think it's back to our original question about the dollarization, the fact that people putting their hard-earned money into pensions and so on. And, because at the end of the day, if you're earning $100 and you put $20 into a pension, you can't suddenly tell me 5 years later, oh, by the way, all that money you've been putting in is not worth anything, right? Which effectively is what happened. So Zachariah is asking a very good question, do I need to get compensated by the government? What does he do? Because, he's a pension and now he hasn't got a pension.
Thank you, Andy. As IPEC, we don't regulate the public service pension scheme. That falls under the Ministry of Public Service. We also don't regulate the NASA. We regulate the private occupational pension schemes or the individual schemes. But coming back to the question, we are aware that the Commission of Inquiry looked at policyholders and fund members who were both from the private occupational pension schemes, NASA, and the public service pension scheme.
Right.
So I believe Zachariah will get his compensation if the recommendations of the Commission of Inquiry are taken on board.
I'm going to get back to you about NASA and so forth, and that's it. But let me first take a question from one of our listeners. IPEC's inspections don't work. Ask the gentleman in the studio to tell us where legal insurance offices are. No one can find them. Comment? Oh, now, please, any of you comment. Can you find legal insurance officers? Because you're supposed to be inspecting them.
Sure, we can find them.
Ah, you know exactly where they are.
Yes, they are in Nelson Mandela, corner Nelson Mandela and Ford.
Oh, well, there you go. Whoever asked that question, I think you got a very direct answer from the IPEC gentleman. Well done. And about compensation of road accident victims. This is another question. What is happening about circumstances, of all those victims, compensation of all those victims of bus disasters? For example, we hear that the buses of all the accidents that have happened in recent history had fake passenger insurance. Clarion issued the policies. The policies turned out to be fake. What is happening with that? If IPEC is effective, what is it doing? It's been 5 years for some of those victims. Now that obviously is a very troubling thing to the families of the victims.
I think they can raise their issues, their complaints with us via the various platforms that Lloyd has alluded to. But over and above that, the other part is what have we done about the fake insurance. I can assure you that we have issued a system whereby cover is now being bought electronically. And because of that electronic cover note system, there are no longer fake insurance cover notes. Because everything, once you buy your cover note, the system is linked to Zinara, what have you.
I think it's important to know that insurance does work. We have a listener here. Insurance companies are not unfair. My mother's motor vehicle was hit and the insurance promised to pay. This was in January, but up to now nothing came about. Whoa, sorry. Can they please repeat the number? Can you repeat the number about the complaints that you have at IPEC?
Okay, they can get in touch with us on WhatsApp number 0772 154 281. 0772 154 281. Alternatively, they can call us on our landline, which is a Harare number 443358. 443358.
Excellent.
Those are the kind of complaints that we receive and we help them.
Thank you. You heard that, listener, so please feel free to do that immediately after the holidays. Now, here's another question. What does having the diamond certificate from an insurance fund entitle the policy holder to? Diamond certificate. Do you know what that is?
I think they're talking about a certificate that is specific to certain products.
Okay.
Yeah.
All right. Okay. So we'll probably have to look into that. Maybe the listener, if you can, WhatsApp us, please, or phone us on 0772 168 045 or WhatsApp 0733 168 045, or of course our social media platforms, Facebook and Twitter. I think we probably need a little bit more about that question to understand it. Now, here's an interesting one. In January this year, the Commissioner of Insurance, Pensions and Provident Fund, Tendai Karonga, said the public's perception is that insurance is a gamble and that the companies are crooks who want to rip off policyholders by not paying claims. This is your own commissioner. What would you say to that? That's the perception, because this is about confidence and perception in your industry, correct?
That's true, Andy. When you are selling insurance, you are selling a promise. So if you fulfill your promise, someone will say, okay, that person is a credible person. So if an insurance company is selling a promise and they fulfill the promise, the policyholder will consider them a credible insurance company. But generally, when you talk to people out there, some of them have this general view about insurance companies being crooks, being people who don't really care about policyholders. But what we can say is you may have bad apples. This is an industry that's very big. You may have a few bad apples who don't fulfill their promises. But generally, the insurance industry is meeting claims. They get claims from policyholders. You know, in the reports that we do, in the quarterly reports and the annual reports, you can actually see the claims that the money that would have been paid towards claims. So it's not entirely true to say they are crooks. There may be a few bad apples here and there, but the Insurance and Pensions Commission is then available to assist in the case of those bad apples. If policyholders feel the bad apples are spoiling their, what they believe they're supposed to get, they can come to us.
Brilliant, thank you. Okay, we have a caller on the line. Hello there. Welcome to Business Unusual. Please, can we have your question? Oh, I think we've lost that. All right, anyway, let's move on. You talked about unregistered agents. We talked about that and fake policies. Remember, this is quotes from your own, from your own. Government is losing about $5 million annually to vehicle insurance scammers. Agreed? Your Tendai Karonga said, it has come to our attention. We have the caller back. Oh, sorry, please, we'll finish that question, but can we get the caller now? Thank you. Hello, you're welcome to Business Unusual. I'm Andy Hodges. How can you ask your question, please? No? All right, anyway, $5 million to scammers. In fact, a mere 1/3 of Zimbabwe's 500,000 vehicle population has genuine insurance cover. I'm sorry, that is quite concerning. Is it not, even to you? What have you done about these unregistered agents and touts and so forth?
I think this was the problem before we issued electronic cover notes.
Okay.
Once we issued the electronic cover notes, this thing is now an issue of the past.
And at the end of the day, you don't buy insurance of a guy standing outside an office. I mean, let's be sensible here. Go inside the office, meet the registered agent. If you need to ask them for their ID, etc., do that. Buy it properly. Don't expect some guy. Whenever you're buying something on the street, you can expect to get something from the street. Correct?
Thank you, Andy. In fact, on that one, let me come in and say, when you are buying insurance for your vehicle, whether it's third party or comprehensive, usually for the third party, someone is just normally what we have noted is motorists, they just want the insurance so that they can be able to get the Zinara licensing.
The discs and so forth.
Yes, the Zinara disc. But what they should understand is insurance is meant to protect them. They are transferring risk. So you can't buy insurance from someone who is undercutting. Third party should be at least $35. But here is someone who says, I will give it to you for $20. Because in your own view, all you are interested in is to get the insurance so that you can be able to get the Zinara licensing. But you should understand that insurance is not meant for Zinara. Insurance is meant to protect you as a policyholder. So if you go to someone who undercuts and charges you $20 when they're supposed to charge you $35, it means that person will not be able to compensate you when you lodge a claim.
Right.
So it's important for policyholders when they're buying insurance to buy from credible people, to walk into an insurance company. They know where they're buying the policy. If you feel that maybe the insurance company has not met what you expected, you know where to go. But if you buy from someone who is at Zimpost out there, you won't be able to locate them. In as much as they may argue that they're able to sell the cover note electronically, but the issue is we want you protected. So you can only buy from an office or from someone who has a proper office where you know that if you feel that you want to claim, you go straight to that office.
Listeners, Lloyd has said it. Insurance is there to cover risk. Yes. So make sure that you buy it from the authorized agents. So I have a question, because it's a follow-up, in fact, about Regal Insurance. Now, the answer is wrong. Regal is no longer on Nelson Mandela. There are signs, yes. Instead of pacifying us, the gentleman in the studio must go check and give us feedback. Regal Insurance business is now being conducted from the owner's house. Now, I'm not sure that you can answer that now. Oh, one of the things IPEC must do is make sure the owner of the insurance company should not be the managing director too. I think they're two separate questions. So I think on the Regal Insurance, whoever that was, I'll confirm that I'm going to get them to get back to us, IPEC to get back to us. Is that okay to say that? Yes? So let's answer the second question. The owner of the insurance company should not be the managing director too. Now, I'm sure that this falls into the whole concept of corporate governance. And I know that IPEC has had huge problems with corporate governance in insurance companies. I mean, Lloyd, maybe you could talk us through that, because this is a major issue, not just in insurance companies, I think in most businesses, correct? No.
This issue has been addressed because we have issued a risk management corporate governance guideline that makes it a requirement that the major shareholder cannot be the managing director of an insurance company.
Okay.
The shareholding threshold for an individual shareholder is 40%. But if you want to be an executive within that insurance company, you can't be holding a certain threshold, shareholding beyond a certain threshold.
Okay. All right.
Maybe
Thank
Andy,
you.
On the one about Regal, what we can ask is the caller, they can come through to the Insurance and Pensions Commission, who will assist them if they have any complaint against the insurance company.
There we go. And please, maybe those numbers again, if you don't mind.
The WhatsApp number is 0772-154-281. We are found at 160 Rhodesville Avenue, 160 Rhodesville Avenue in Greendale, near Kamfinza Shops.
I think listener who asked about Regal Insurance, please do, because obviously this is something that affects you directly. So please find out from IPEC, go visit them, call them on the WhatsApp numbers and phones and find out what's going on. Another question for you. The loss ratio from compulsory motor insurance is below 5%. Doesn't that mean that the policies are overpriced?
I don't think, I'm not sure where they are getting those statistics.
Okay.
Because the loss ratio for motor insurance is in excess of 40%.
Oh, okay. So we need to look at the numbers.
For some insurance companies, as high as around 65%.
Okay. Now, one thing that I was incredibly, I suppose, proud of you doing was when you've closed down 224 pension funds in the last 13 months, occupational pension funds. Is that correct? Because it's a question that I struggle with myself. Here I am. I work for a company. I pay every month, they deduct my $20 or whatever to put into a pension scheme, correct? But the company doesn't remit the money to the pension fund. So come a rainy day or something happens to the company and it shuts down, I'm expecting this pension out, but it actually isn't there. I mean, I don't know what that is, but that somehow sounds very illegal. I mean, to me, I'm not sure how, I don't know what other word I can use it, but as someone who's expecting that pension back, what would you say to that?
The law requires that whenever deductions are made from an employee, those in respect of pension contributions, the pension contribution should be remitted to a pension fund within 14 days after the end of the month within which those contributions relate.
Okay,
so what that means then is it's illegal for a sponsoring employer not to remit the contributions to a pension fund.
Okay.
So the members of the pension fund or the pension fund itself can take legal action against the sponsoring employer.
Okay, but you're talking to me about I suppose, theoretical, so to speak, right? But in reality, what actually happens? Because 14 days, I'm sure IPEC doesn't get involved on day 15, do they? I mean, you operate after you've received a complaint or something's happened, because I understand companies are facing viability problems, the tough economic times and so forth. So it's tempting for them to keep the money they should be sending to pension funds, for themselves, so to speak. But it seems as if people would then be shortchanged, because IPEC, obviously, you're not the policeman. You can't be there every second of the pension fund. You obviously react to reports or react to complaints. But what would you say to those people who are putting money into these sort of company pension funds, so to speak, or is deducted? What should they do to make sure that it's actually happening?
All right, Andy. Each pension fund or pension scheme, they are what we call board of trustees. This board of trustees has representatives from the fund members. It has representatives from the sponsoring employer. So the board of trustees, those who represent fund members, they should make sure that the money is remitted to the pension fund.
So as an individual person paying in, I can find out myself whether my money is going to the pension fund.
The board of trustees, the 50% of the representation of the board of trustees must be elected by fund members. So you can ask the board of trustees representatives to say, is our money being remitted? But the problem that you will have is you have people who work maybe in finance or accounts. These are also fund members. They know the company is not remitting to the pension fund. They know the company is deducting but not remitting to the pension fund. Some of them, even finance directors, they know they are deducting but not remitting to the pension fund. But one day, either you will be retrenched, you will be fired, or you will leave that job. You also want your pension.
Right.
But if you were the finance director and you were not remitting to the pension fund, where will you expect to get your pension benefits if you are not remitting? So it's necessary for staff, especially those who are aware that the money is not being remitted. They should make sure the money is remitted. If their company is not remitting, they can bring it up with the board of trustees. The board of trustees can even take it up.
I think it gets deeper than that. I think that anyone who's working for a company or in any organization that is remitting pensions, it's up to you. Find out. Be proactive. Go out there. Find out if your pension's being, because it affects you. It's your pension, it's your money. So find out. Be proactive. Talk to your trustees. Talk to your representatives, and make sure that the company is sending the money to the pension fund. Now,
one of the requirements that we have put on the pension funds is to make sure that each year, whenever they're issuing out a benefit statement,
right,
the pension fund should tell the members how much of their benefit is funded, how much is unfunded. So if your benefit is 10,000, the pension fund should be able to say, we've only received 7,000 from the sponsoring employer, and the 3,000 is still outstanding.
Okay.
So that can empower the members to take necessary action.
I think so. I think, listeners, the money that goes into pension funds and insurance policies, it's your money. So just like any part of your money, make sure you look after it. You make sure where it goes, how you spend it. So make sure that you follow up on these issues and make sure that the company is doing what it should do under legal law.
In fact, Andy, the pension fund is a different entity from the sponsoring employer. The sponsoring employer cannot say, let me borrow from the pension fund to pay salaries, or to say, I will pay you later.
Which has happened in America, if I'm not mistaken, correct?
Later. The pension fund is independent. Its decisions are independent from the sponsoring employer. So the sponsoring employer should not be directing the pension fund how they operate or how they invest their money.
Okay.
So the board of trustees, again, the buck stops with them to make sure the money is remitted to the pension fund.
So listeners, find out who your board of trustees are if you have such a pension fund, and ask them the right questions. And of course, if they can't help you, obviously IPEC is behind there as well. They can assist you with your complaints, correct? Okay, let's take another question. Why can't IPEC lobby for change of legislation or policy to ensure that NASA funds benefit all ex-employees who contribute to the fund, regardless of how long they contributed? Because that's the original purpose for which the fund was created, to provide social protection for the retired and the unemployed. So, we talked about NASA. Now, you said that you do not cover NASA, and also I understand you're lobbying to look at medical aid, correct? Medical insurance. Now, I suppose the first question is, if you are this commission that's supposed to regulate the insurance industry, why would you not cover NASA? I mean, NASA is an insurance. It's a pension fund, is it not? In fact, it's our pension fund, correct? So why would you not regulate it as well? Is that a question for you or for the legislators?
That would be for the legislators, but we have since made recommendations to the government to make sure that the medical aid societies and NASA come under our purview. And the Commission of Inquiry has also made similar recommendations. So we await the decision from government.
Okay. So you have put this proposal forward because it just makes sense, doesn't it? I mean, if you regulate insurance, then that's all insurance. It doesn't change the way they operate. It just changes your oversight over it and make sure that it's fair to the ordinary Zimbabwean citizen.
In fact, the rationale behind those recommendations is because we want to deal with regulatory arbitrage, where you have another entity doing something else, and on the other hand, the other one is doing whatever it's doing. So, for instance, the question that's arising there is for the pension funds that we regulate, the private occupational pension schemes.
Right.
We have put in a measure where we say if someone has not yet reached retirement age, but they are out of employment, they need to pay their mortgage, they need to pay their medical bills, they need to pay school fees for their children, they can apply for a commutation to be able to pay those.
Right.
But you may find that NASA, on the other hand, you can only get the money when you have reached retirement age. Okay. So those are some of the problems that we are having with some of the fund members that we get. They say, how come my colleague who was working for this company is being paid, or they've been given their commutation, but I'm not being given from the other end, yet they're both pensions. So that's why we've recommended that we have all the insurance business being regulated by IPEC, all the pension business in Zimbabwe being regulated by IPEC.
Okay, I've just a couple of quick questions here. I mean, economist Eddie Cross said increasing minimum capital requirements for insurers will help weed out bogus insurance firms. And I know that IPEC has put in place some recommended capital thresholds for insurance companies and micro institutions as well. And I think it's vital. Maybe just quickly tell us about that.
Yes, that has since been gazetted. We had minimum capital requirements increased. The reason the minimum capital requirement is increased is to make sure that the insurance company is able to meet claims when they come. Because if the capital is not adequate, they may not be able to meet it. Right. So the reason behind increasing the minimum capital requirement is to make sure that the insurance company is safe and sound to be able to meet claims as they fall due.
Perfect. I do have a question from Jay Chirunga. I'm not sure you'll be able to believe. What are the provisions of Statutory Instrument 323 as far as retrenchment? Or when is it applied from? This is very quickly, please, because we have to wind up now. Can you answer that very quickly? Statutory Instrument 323 as far as retrenchment.
Yeah, if you are retrenched, then you can access your benefits. You are treated as a pensioner.
Okay, brilliant. Okay, please send, as I said, IPEC, please, they are there for you, the listener. You have problems, you have queries, you want to ask any question about insurance and pension funds and so forth, contact them, because they are there for you, the listener, and the insured of us in Zimbabwe. So I think we're coming to the end of our show. So I really would like to, you must see the research I have. We can talk about this for hours, but I'd like to thank my two guests today. Now Chivangiwa, who is IPEC's Manager of Pensions. Now, thank you for coming to Business Unusual.
Thank you, Andy.
And of course, Lloyd Gumbo, who is IPEC spokesman. Lloyd, thank you. It's a pleasure.
Thanks for having us.
And of course, as usual, we end on a quote. And this quote comes from the Commissioner of IPEC. He says, "The rationale behind increasing the capital threshold is to increase the capacity of insurance to underwrite business and to be able to pay whenever a claim is made. There is need to protect the interests of policyholders by ensuring that the insurance companies have adequate capital to pay when a claim is made. This contributes to the stability of the financial system." Something to think about. Good night, and for those of you who are driving, don't drink and drive, and you all be safe.